India's energy transition story is attracting serious capital. Transition VC has closed its debut fund at 700 crore rupees, nearly double of its original target as investors bet big on India's future of energy. The fund is backing engineering-led startups across electrification, storage, industrial decarbonization and alternate fuels at a stage where conviction is scarce but impact can be massive. So what's driving investor confidence? Where's the capital going? And how big can this platform become? I'm joined now by Rayan Shingati, the co-founder of Transition VC. Rayan, thank you so much for taking time out and being here with us on Startup Street. You know, Fund 1 closed at nearly double the original target, right? So what sort of changed during the fundraising journey, and what did LP see in your thesis that gave them the confidence to back this particular theme in such a big way, and how big is this opportunity?
So thanks to LPs, of course, and thank you for having us. So we've successfully closed a 700 crore fund, oversubscribed from our initial target of 400 crores. I think this strong response shows the growth in conviction that India's energy transition is no longer optional. It's not about just climate change. It's about India's energy security and long-term energy independence, especially in today's volatile geopolitical environment, right? We see this as a massive $250 billion plus opportunity in India by 2030. And we are backing startups that are making real decarbonization difference while making real money. So, yeah.
Sure. Yeah, and you know, within this broad energy transition theme, right, there's electrification, storage, alternate fuels, industrial decarbonization. Where are you sort of leaning in most aggressively today, and which areas do you believe are still like sort of underappreciated?
So we invest in energy solutions that make existing solutions faster, cheaper, better, and not just science projects. So the real opportunity that we see is in industrial decarbonization, data centers, smart meters, electric mobility value chain, advanced manufacturing and green manufacturing solutions, and also long duration energy storage and power electronics, semiconductors as well. And these are exactly what we've backed from our Fund 1 so far. We also see a massive opportunity in the whole hydrogen economy coming up. And this, we believe, would be very important for India's goal to be eventually energy independent.
Sure. And you know how much of this Fund 1 is sort of reserved for follow-ons? And how actively do you plan to double down on breakout companies as they move from early traction to large-scale execution? Take us through the deployment plan at this point. You've already invested in a couple of companies, so take us through that plan.
So we've invested almost 60% of our capital. We've identified about 17 startups, and we believe we will invest the remaining by end of this year. So we invest something known as catalytic capital, which we believe is a major gap in the market. This is where after the product is developed, but before product market fit is established, this is a major gap today that we are filling in with our capital. We invest anywhere between 1 to 3.5 million over the life of the startups. In some cases, we invest a couple million, and then we reserve another 1.5, 2 million to help them achieve product market fit at scale. We measure success very clearly. And for us, it is helping startups hit almost 100 crores of revenue, turn towards EBITDA positive within 24 months of our investments, which is slightly unconventional in VC investments because we believe in positive unit economics and not growth driven by cash burn. So with that belief, we invest a lot in hardware technology solutions, which again is quite ignored by most VCs, unlike software-driven solutions.
Sure, and you know, you've already
That's exactly where we massive.
Yeah, and you know, you've already seen acquisition interest across the portfolio, right? So how are you sort of thinking about exits, strategic M&A versus IPO pathways in India's like evolving energy and manufacturing landscape?
Absolutely, and those are tough calls, right? So we've seen over 6 acquisition offers, and they're tempting because there are multiples of where we invested at. But we believe in our founders because they want to build something larger than themselves. Indian public markets has rewarded engineering companies very, very handsomely, which is why we believe providing the right resources, which is not just capital, but also deep domain expertise, which comes from our LPs to help them open up our networks, convert relationships to purchase orders, and really hit that 400 to 1,000 crores of revenue in 5 to 8 years of our investment period and drive them towards IPO. It would be good to see almost more than half of our companies move towards IPO eligibility. That doesn't mean that they'll all go IPO within our investment horizon. Some of them would be pre-IPOs or secondary exits, but about 30 to 50% of our portfolios could also be M&As, and that's purely driven by high gross margins and VC scalable businesses that our founders have built.
Sure. And, with Fund 1 closing at 700 crore rupees, Fund 2 is already seeing early commitments, right? How are you sort of thinking about AUM growth of the next few years? And what does right-size scale mean for a sector as capital-intensive as energy transition?
This is something we've heavily debated internally, and it's a good problem to have. In early commitment for Fund 2 as well, even though we have not started raising capital. We want to start raising capital before the end of this year, after we've completely deployed. We believe it should be at least a 1350 crores or a $150 million fund. And we've built a solid thesis around it. And we believe that's exactly what India needs for the next 3 years of energy transition growth. And we would be here with the capital to provide it.
All right, you will be there with the capital provided. All right, Rayan, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best going forward on this journey.
Thank you. I appreciate it.
On that note, it is time for us to head into a short break. But coming up next, AI services firm Ivar bags $4.6 million in a seed round led by Soren Investments with participation from Bessemer Venture Partners. We put the firm's founder on the hot seat to find out more. Stay tuned.